I want to
Ben, we
thank
gaan beginnen.
I want to thank absolutely everyone from the Wall Street Silver community. We are back with an incredibly special guest, Willem Middelkoop. We also have Jim Lewis with us and Lee Justo from the Wall Street Silver community to ask some questions for Willem. Jim, do you want to start it off for us?
Well, welcome, Willem. Thank you very much. I've been following you for almost a year on Twitter. I mean, I love reading your stuff, and thank you very much for accepting our invitation. Um, you're the founder of the Discovery Fund. Your fund was up 85% last year, which, congratulations, amazing performance. We will link your fund in the description of the video here. First question. You specialize in what you call discovery companies, really just very raw, early stage commodity companies. How do you find these companies? Do you go out and do you visit them on site? These must be incredibly tiny companies when you're looking at them. What is your process?
Yeah, thanks for the introduction. I'm the founder of the Commodity Discovery Fund, founded in 2008. I've been a private investor in this space since early 2000s. Bought my first Kitco silver bar in 2002. It was shipped over to the Netherlands from Canada. But I soon started to understand that when you want to have exposure to gold and silver, it's maybe much smarter to invest in the equity space because you buy your gold and silver on a large discount. We can buy silver, which is still, of course, in the ground for 10 cents an ounce. So I started to specialize in investing in the equity side, the gold and silver miners. And then I learned that you shouldn't invest in the producers because the producers, they end up the year with less ounces in the ground and they sold too many ounces too cheap during the course of the year. So it's much better to invest in companies who are discovering the gold and silver and not producing it. So I started to concentrate on the exploration side of the business instead of the production. And then I learned that if you invest in the exploration companies who are actually making a discovery or are responsible for world-class discovery, like Meg Silver or Majestic Silver, then you can have incredible returns. So since 2005, 2006, I specialized as a private investor in this space. I even published my own newsletter, a Middelkoop Discovery Alert Service in 2006, 2007. And then somebody told me, you're stupid, because you sell your best tips for $99. You should build a fund and keep these secrets to yourself. And that's how the fund started. And we started as a very small fund, only 3-4 million. We're now over 150 million, over 170 million Canadian. We have 1,200 high net worth investors, mainly Dutch or Dutch speaking, but also from abroad. And we have over 200 investments, unique investments. But only 60 of these investments are real serious investors in which we have stakes of $250,000 or more. But we like to have many small toes in the water. And actually, we are invested now in over 20 silver exploration companies, so specialized in finding silver. And actually, we were co-founders of Reina Silver, who was a company set up to explore for silver in Mexico. So that's my background.
That's amazing. That's an amazing story. Gosh. Lee?
Sure. Willem, I've seen you state that you use Elliott waves in your analysis. I mean, is this how you're discovering some of these mining companies?
No.
And also, looking at the silver chart now, do you think that we did a one wave off the March lows of last year, and currently we're in maybe a second wave of 5?
Yeah, great questions. When I started to invest, I come from, I've been a journalist for 20 years. Between 1985, 2005, I was a journalist. I worked for Dutch TV. So I always tried to think very logical when it came to my investments. But I learned over the years that it's often much smarter to look at the technical side, to look at the graph instead of the fundamentals. You can have great fundamentals and go down for years. So we use technical analysis, and especially Elliott wave analysis, more and more to judge where we are in the cycle. We will always invest in gold and silver companies. We will always be long, but to decide when you should buy a company or sell a company or take profit, then the technical analysis comes in. So we don't use technical analysis to research a company working on an investment, because working on a discovery, because like Jim asked me, what's our process during the discovery phase? Then the only thing important is the news coming from the drill results. But when a company is a little bit more mature, or market is a little bit more mature, and if you ask me about the silver market, yes, we made a generational low, I think, at the early part of 2016. We've had a first run up in 2016. We had a retest of the bottom in early 2020 during the Corona crash. I see that as a retest of the bottom, and then we had a very violent move up last year. That was a 1, I think. This correction is a 2, and the next leg up should be very severe. And if we cross $30, I think we could run to $50 within a year. And I've told you, I've been in this market a little longer. I'm 58 now. And I still remember the run in silver in 2010, 2011, 10 years ago very well. I was giving the same talks like I do now. And I said to people, you should buy silver now under 10 or around $10, because silver might jump to $50, which actually what happened in 2011. I made a killing on silver futures myself, lost quite a bit because silver was attacked violently May 1st, 2011. And so that's the way I use technical analysis now.
Now, do you broaden your analysis to social trends? I know in Robert Prechter's books on Elliott wave, he draws parallels between social trends. Best known example would be the hemline index. And if you do that, how do you see the world right now?
I prefer to combine Elliott wave with cycle analysis. So I watch time cycles. We spend quite a bit of money on subscriptions, on specialized newsletters, on Elliott wave, but also on cycle analysis. And I think as an investor, you should combine it all. I've been an investor in silver, like I said, since the early 2000s, and I regard Eric Sprott as my mentor, because Eric Sprott, he's a little older than me, he's over 70 now. I was fortunate enough to meet him a few times, and I studied his writings, and I studied his business and his company, and he's a fundamental guy, and he already wrote in 2010 there's a very strong supply and demand situation in favor for silver. But this has been ongoing for 60 years now. Actually, there's been a production deficit for over 60 years now in silver. And actually, President Johnson, who was the guy who introduced the Coinage Act in 1965, in which the silver coins were ended, one could say. And this was because, and that's what President Johnson said in his speech, there was a silver shortage in the 1960s. And that's why we got rid of the silver coins. Here in the Netherlands, we still were paying with silver coins in the 1980s. Mm. And there has been a fundamental shortage in silver, or production deficits, which are actually bringing a shortage of silver in the end for over 60 years now. But by stopping to use all the silver coins, we had an above the ground silver stock available of all these old coins of over 3 billion ounces. And we spent and used all these 3 billion ounces in the last 50, 60 years. And most of this silver ended up into the vaults of the silver ETFs. And I think tricks are being played now with the silver ETF holdings, which are resold and reused time and again. And I think that's why we are also one of the groups who are advising investors to start buying silver through the PSLV and not the SLV, because the PSLV is set up by Sprott, and we're all quite sure that they do have the silver which they claimed to have, and that's a big question mark for the SLV.
Now, Willem, we have a question here from our Redditors on Wall Street Silver. They're saying, do you think the U.S. will go into hyperinflation? If so, and the USD becomes worthless, do all other countries also go into hyperinflation?
Hyperinflation doesn't happen very often. I'm the author of The Big Reset, and in The Big Reset, in the appendix, is a list of all failed currencies. And actually, there have been dozens of currencies which ended up into hyperinflation, but it doesn't happen that often. And it would be very rare to have the US dollar in hyperinflation. But one could say that the US is on track towards hyperinflation. But central bankers know this, and central bankers can use certain methods to avoid reaching hyperinflation. We can always bring gold or silver back into the monetary system. This has been done in the past. So I think we're on track towards hyperinflation, but central bankers will take the initiative to avoid reaching that point. And in The Big Reset, I speak about a coming monetary reset in which I expect there will be a new anchor for world's monetary system. So there will be a successor for the dollar. We will need debt restructurings. Well, that's happening now with the student loans. Mark Carney, the former governor of the Bank of England, he already proposed that we need to find a new successor for the dollar. And the third part of this reset is a revaluation of gold and silver prices, which might happen when gold will be reintroduced into the system. So I'm not that afraid for hyperinflation, but it's a fact now that central bankers want to have inflation, which is serious enough if you're a saver.
In the United States, many of us believe that our CPI, the inflation index, is manipulated and fake. Are those same types of numbers also fake in Europe? Have they manipulated them down to?
My first book was published in the Netherlands in 2007. I had a special chapter on inflation numbers and why they were fake, according to my analysis. And I think the inflation numbers in all Western economies are highly adjusted. Mm-hmm. It's very beneficial for governments to present lower inflation numbers because economic growth has to be lowered because of inflation numbers, and you have all the social, all the costs of all your social programs. They will go up if the inflation is if they have to be adjusted for higher inflation. So there's a clear benefit for governments to publish inflation numbers a little lower. And if you publish the inflation number, let's say 1% below what they actually are, and you keep doing that for 20 or 30 years, you get huge mismatch.
Well, one of the things that sort of confuses me is the central banks are all saying they want more inflation. You know, they're telling us they want their target to be above 2%, but then at the same time, the Bureau of Labor Statistics is presenting fake data, and that sort of conflict or misdirection that's going on. What's going on there?
Well, I think central bankers know that because of their policies, there is a debasement of currency. They know there is a much stronger inflation than they officially can acknowledge. Mm-hmm. And they know that people feel this and see this inflation. So if you have a communication strategy in which you say you want higher inflation, mm-hmm. then when the inflation arrives, you can say, oh, look, our policies are working.
Okay.
I see it as a communications trick. Mm. And also you shouldn't forget that central bankers are trapped. In a way, they are trapped now. They know this. And the only thing they can do, you know, because we need these debt restrictions, but they still have the hope that they can inflate away our debts like we've done in the 1970s. And there's a great study which has been done by Professor Rogoff and Professor Reinhardt. The title of the book is It's Different This Time. It's a study about 400 years of public debts. And they clearly show that you only can get rid of debts by creating inflation when you have a very strong economy and when you're in the growth part of the cycle. And when you're a mature economy like we are now, it won't help. Maybe you can postpone it, but we need debt restrictions within a decade.
Is that even possible with some countries in Europe, like Italy? I mean, I've heard that some of the ministers in Italy's debt problems are even proportionally are bigger than the United States. They're on Greece level in terms of when the Greek debt crisis happened. They're already there. If the European Central Bank wasn't buying so many Italian bonds right now, Italy would be paying 7 to 10% or higher interest rates. Is there any way out of this? Because the European Central Bank, they're not going to forgive debt. They're not going to write this debt off. What's the way out of this?
Oh, it is very clear. It's you create more and more money on central bank balance sheets. And you use this money, which is being created out of thin air, to take more and more bad debts from commercial banks to the private banks, to the central banks. And many people don't understand that the IMF last week has created 500 billion of new SDRs, special drawing rights. This was approved by the G20. And this was proposed by Janet Yellen. So now the IMF, which had a virgin balance sheet of only a few hundred billion, has just tripled in size. And we need the IMF balance sheet now because the central bank balance sheets are getting quite stretched. And I wrote in the Big Reset, I expect the IMF to increase their balance sheet by trillions and trillions to create trillions more of SDR, which is the IMF currency basket. But it's another layer of fiat money.
Yeah.
But it's a layer, you know, even you guys don't know this yet and don't talk about this yet. So they can hide it from the public. But in the next few years, we'll hear more and more of these SDR allocations. And it's just another layer of fiat.
Ivan?
Yes. So what are your top 5 silver miner exploration companies that you have on your list right now?
That might be secret. That's top secret, Ivan.
I won't tell that to you because these companies are very small. Many of them are less than 50 million market cap, or around 50. And I've got the experience when I mention a name, you know, everybody is buying that name. And I mentioned one name, it's Reina Silver. and because we were founder shareholder. But you shouldn't buy it now because there's the drilling. First wait for the news that they discovered silver. We're not sure yet. We're in a great system, but if you look at the valuation now, that would be too risky. But I think it's a great idea when people buy first physical silver. That's what I bought first for myself as well. And then I think you shouldn't gamble on one or two stocks. Just buy the SIL or the SILJ, the ETFs. They will run like hell when silver breaks 30. They're very liquid, and it's too risky to buy one or two or three names. And even if you look at Majestic Silver, which is a nice company, and we like Keith a lot, the CEO. But if you look at the valuations, it's a bit stretched. So better use the ETF, and again, use the technical, wait for the technical green light, because first I want to see a breakout over 30. And we've seen time and again, although there's a production deficit for 50 or 60 years and the fundamentals are in favor of silver, silver price went down 40, 30, 40, 50%. Silver shares went down 70, 80, 90%. So this is not a guaranteed win for all investors.
One of the things that prompted you to accept our invitation was we were talking about Comex manipulation of the silver prices for years. And you've written chapters about this, you've written articles about this. I think you sent me a graph right before this meeting. Do you want me to share that graph and talk about it?
That's a great one.
Let me. I'll share this. Let me know if you guys.
Well, let me give an introduction to that graph.
Okay.
I've been investing in this space for over a decade, and time and again you see the silver price rising in Asia, and then when the trading starts in the US and the Comex opens. 2:20 p.m. our time in Europe, you see silver price going down because silver is sold on paper. The paper silver, the futures are being sold. Everybody can go short silver on the futures market if you have enough cash on your account, on the Interactive Brokers or another broker. And we've seen for the last 2 decades that there are there's a small group of traders, only 8 traders or 8 banks or 8 houses. They are short over 300 million ounces of silver, and that's 50% of annual silver mine production. And we've seen a similar situation with palladium years ago. So if you look at the outstanding shorts, they are massive on silver, on platinum, on gold, and they used to be massive on palladium as well. But in palladium, the physical demand increased around 2018 to a level that the shorters couldn't survive anymore and had to, close their shorts. And if you look at the open short position for palladium now, that's a very normal situation comparable to oil or whatever. But in silver, we have a situation that we need 120 days of world silver production to close all these shorts. In oil, that's 30 days, only 30 days. In oil, that's only 5 days. So we need 120 days of world silver production to close all these silver shorts. So the level of open interest in silver shorts is incredible. And that's exactly the same situation like we had in palladium a few years ago. And there we have proof that if the physical demand is strong enough, you can kill the shorts. Only the palladium market is a much smaller market than the silver market. Mm-hmm. And silver is much more important to the well-being of the financial system and the US dollars. So the forces we're up against are much, much stronger. But if we continue to stack physical silver, and I'm very glad with you guys, because I've been talking about this for 20 years. I'm so glad finally another generation came along and understood the story and took over. But if we can convince people to buy silver, which actually very good, a great asset for their, for their old age. I always explain to people that they should buy some silver because it's so cheap now. Actually, it's the only commodity which is still half of the price it was trading at in 1980. There's no other commodity this cheap. So if we keep stacking, I think we can bring situations to the silver shortage in which they have to give in. And if you look at all the evidence now, the circumstantial evidence, you see there's a lot of stress in the market. Sprott just published a release that I think they can buy another $3 billion in physical silver. If they have to, if the billion banks have to provide billions of physical silver, billions of dollars value of physical silver, I think the system will get very stressed.
Yeah, I saw that. I tweeted that out, and you actually responded to my tweet about Sprott is buying 16% of world production. With their previous offering of 1.2 billion, they're still taking physical delivery on that, and they're now preparing another $3 billion for another offering, and it adds up to like 124 million ounces.
Wow.
Which is out of the annual production from the mines is at 800 million and declining. But anyways, do you want me to share that graph you sent?
Yeah, please.
Okay. Can everyone see that now?
Yeah. There we go. We see it.
If you look at this graph, it's a little technical, but it shows two lines, and the red line is the way silver has been trading in the last few decades. And the blue line, that's where it gets interesting. The blue line, we only take the way silver is trading outside the Comex trading hours. So we only use the silver, the moves of the daily silver price outside of the Comex trading hours. And if there wouldn't have been any US Comex trading, silver would be at $230. And of course,
oh my God,
that's crazy.
This is I've heard rumors about it. This is the first time I've seen the chart displayed this well done.
Wow.
But everyone amazing. Talks about them slamming the silver price at certain times of the day. And if Comex, what this is telling us is if Comex were not part of the process at all, this is likely where the silver price would be.
Well, I think, of course, this is a lap situation. Of course, there will always be trading during US business hours, but let's do half, and then we get $115. I think $115 would be a great start for a normal silver price. And Eric Sprott has always said that once silver breaks free, you can expect silver to jump to $100 within a week. Wow. And I agree on that analysis. So my goal always was $50, and we reached that in 2011. Now my goal is $100 for starters, and then we'll see where we get. But if silver goes to $100, the SIL will triple or quadruple. But if you're in the right silver discoveries, you'll have amazing returns. So there's so much upside and there's so limited downside. And especially if you stack the physical silver, it's like your own home. If you stay living in your home, the price on which your homes of your neighbors are being sold, that's of no value to you, And that's the same with buying physical silver. If you have the silver and you stick with it, it doesn't matter that it goes down 20 or 30% during the next few months or few years. And there's so much upside here.
Well, I've been watching your tweets very closely since Silver Squeeze started. About in late January, and during the month of February, you were very public about preferring Sprott PSLV over SLV. I recall at least a handful of tweets you made where you actually told all your followers, "Hey, I bought 250,000 of PSLV today." Tell us about that and what convinced you that SLV is probably the wrong place to be.
Well, I was surprised by the whole silver movement from your group, from the Redditors. And the first day I already said, hey guys, if you're interested in silver, be sure to buy the PSLV and not the SLV, because we've been in this industry for over a decade. So we know we can trust the PSLV. And of course, there was a lot of education needed for all the new investors. But I've been surprised by the way, your audience got the story, understood the story, and did their homework. And as said, the PSLV is a physical-backed silver ETF operated by Sprott in Canada. And if we can't trust Sprott Canada, we can't trust anybody in this world. So I think we can trust they have the silver. They are in our camp. They want to break this unfair system. But the SLV is larger, and it's operated by JP Morgan, or it's that's the custody is the silver is in the JP Morgan vaults. So, I think we all understand that you can't trust them. But I think the silver, which is owned by SLV, and we see the same in gold with the GLD, and we have all these circumstantial evidence that the prospectus has been changed. And with the GLD, the physical gold-backed ETF, we know they at least some gold of the Bank of England. So all kind of tricks are being played there.
Mm-hmm. I'd like to follow up on the graph in our discussion earlier about the central banks. Clearly, someone's manipulating the market. I mean, the evidence is certainly pretty strong on the circumstantial side. Also, it seems like the central bankers read your book, labeling their whole currency movement the Great Reset. How do you see gold and silver performing in a world where the central banks maybe completely decouple the digital dollar and the digital yuan from precious metals? Do you think there's going to be like a tremendous black market? Do you think the prices are going to skyrocket? What are your thoughts?
If you follow the news now and the sentiment now, it's Bitcoin is the new gold, and gold is not needed. And look, gold is failing. And the chief investment officer of BlackRock, he goes on CNBC to explain that Bitcoin is the new gold. This wasn't a slip of the tongue. This was planned. So the Wall Street banks, the billion banks, they love Bitcoin now. Not because they love Bitcoin, because they can say Bitcoin is the new gold. So they hope we'll all buy Bitcoin now instead of gold and silver. And that's why Bitcoin that's the only free market now. And I put quite a bit of my money into Bitcoin because it's the fastest horse in the race now. But Bitcoin, can you mention one central bank which has been buying Bitcoin in the open market? No, because central banks know Bitcoin won't be used in the next phase for world's financial system. Gold will be used, or at least you need gold as a hedge on the current system. And that's why 22 central banks bought physical gold last year. And that's why Russia and China are adding gold in huge amounts. So if you study history, and I consider myself a student of monetary history, gold is used time and again to restore trust in the financial system. We've been here before. So I think central bankers are friends of gold and silver in the end, because they will need gold to be part of the financial system again, to avoid that we reach the stage of hyperinflation.
So do you think that they're manipulating? I'm sorry. Go ahead. Please continue.
They can publish any day a G20 or IMF news release stating that they revalue gold towards $10,000, and from tomorrow on they will buy all world gold production to add to their reserves. They can do that.
I was going to ask, do you think they're manipulating the price to keep the price down so they can acquire more, or are they manipulating the price just to keep the whole illusion of fiat going?
Gold was used to back the US dollar in 1944 during the Bretton Woods conference. The US stated that the US dollar was as good as gold, and countries could always exchange surplus dollars for gold. The US could no longer hold that promise in 1971 because too many countries returned surplus dollars to the US and exchanged that for physical gold. Even the Dutch central bank requested the physical gold. And that's why Paul Volcker, he flew on Air Force One to Amsterdam one day to convince the Dutch to stop this request. And then Jelle Zijlstra, who was the president of the Dutch central bank, he told Paul Volcker, because Paul Volcker told him, we have a problem with your request, you're rocking the boat. And then Jelle Zijlstra said to Paul Volcker, if this rocks the boat, then the boat's not very solid. So in 1971, the central bankers understood that the US was debasing its currency. So then President Nixon had to close the gold window, August 15, 1971. And since that point in time, gold and silver are the enemies for the US dollar. Mm-hmm. Because they used to support the US dollar. From that time, they were the enemies. So everybody who's buying physical gold or silver, that's a vote. That's a vote against the US dollar. So that's why they have to suppress any interest and any price rise of gold and silver. And there have been enough statements to support this claim. Paul Volcker has publicly stated that the only thing we did wrong at the end of the 1970s, when we had this when they had the strong inflation and gold run to 880, he said it was our mistake that we didn't suppress the gold price. So they learned from that mistake. So you have a very suppressed price of gold and silver, because these are always connected. And you should regard this as a football which you put down when you're in the bathtub, and at a certain point the pressure becomes too large, and when you release that pressure, the ball will jump 1-2 meters high, and that's what will happen to gold and silver one day.
Now,
go ahead, Ivan.
Sorry. Now, Willem, we have a question here from our Redditors. It's saying, Willem, I'm a fellow Dutchman who read your first book in 2009, which helped me a lot to prepare in the past years. Can you maybe share your thoughts on the similarities between the worldwide events between 1929 to 1933 and what we saw in the past 10 years?
Yeah. People always look for clues, of course, and then they look at the past. In 1922, which date did he mention?
1929 to 1933.
Yeah, 1929 to 1933. Of course, that was the Great Depression. And that was the result after the market collapse in 1929, which happened after there was so much excessive speculation in the 1920s. But it's a totally different point in time. We were still more or less on the gold standard. The situation now, if you look at the worldwide speculation on stock markets, could be compared to early 2029. But the depression which developed in the early 1930s was the result of totally different behavior by central bankers, because at that time they weren't printing money. They were almost closing off liquidity. So now we had our 1929, that was 2008, that was the Lehman collapse and the collapse of markets. And then central bankers, they learned from their mistakes in the 1930s. So they opened the floodgates and started their QE programs. And if you look at central bank balance sheets, before 2008, total central bank balance sheets, the total of their assets was less than 5 trillion. It's 30 trillion now. So you can't compare that depression with the situation we're in now. So the risk is now not a deflationary collapse like we had then. It's an inflationary, it's a hyperinflationary melt up. And actually, I think we're in the first stage of a hyperinflationary melt up. Look at what happens to Bitcoin. That is a hyperinflationary melt up. That could well be the first example of a hyperinflationary melt up, in which people will laugh that Bitcoin reaches 100,000, and they will laugh that it reaches 500,000, and then it reaches 1 million. And if you look at Weimar Germany, the gold price in Deutschmark kept rising to billions per ounce, because when you have unlimited creation of fiat money, you can have unlimited upside for Bitcoin and silver and gold. And I think one day silver will see the same gains, but it will happen almost overnight. Sometimes you have these very violent resets. And if you study the price of gold over the last few hundred years, then you see the price of gold always follows the level of money creation. But gold, the price of gold and the amount of money, they don't go in tandem. You always see this gold price going back to the new level of money creation, but it always happens within a relative short time frame. This happened in the 1930s because gold was revalued by the US. It also happened in the 1970s after the closing of the gold window. And I think we're actually now part of this cycle in which gold moves up suddenly. We've seen that in 2009, 2010. It has been suppressed over the last few years, but now the gold and silver correction seem to be over. You could have a very quick run in the next 1, 2, or 3 years, and it could happen quite violently.
Hey, Willem, I'm about to share another graph that I want to turn the discussion to silver mine global production and the decline and the shortages. So let me, can everyone?
Yep.
Yeah.
You see is it the blue and red graph? Is everyone seeing that?
Yep,
Yeah, that's the one.
So what this is showing is, actually, let me get this on my screen. It's showing the decline in silver yields for global mining production for silver. We've mined out the easy silver. The new deposits we're finding are smaller, more expensive, lower grades of silver ore. Is this what you're seeing also out there in terms of we peaked at 900 million ounces in 2015. Now global production's down to 800 million ounces a year. Do you see this continuing? Do you see enough mines coming online in the near future where this is going to turn around? Is this the shortage?
Yeah, this is why we're in a perfect storm situation now, because we don't see this in silver. We see exactly the same trend in gold and in copper. So we have been depleting the richest deposits worldwide. It will be harder and harder to find enough commodities and enough metals to keep up with demand. And that's why we are investors in this space, not only in silver, but also silver is only 15% of our portfolio. We're also in copper and nickel and gold. We're active in all metals in which we expect production deficits. And we already have a list of 8 metals which show a production deficit. Platinum is there, palladium is there, copper is there on the verge. So to invest in hard assets like commodities, that's getting more interesting every year, by definition, because this is a global trend. And now we know that worldwide money debasement and worldwide QE and money printing, whatever you want to call it, is getting to a higher level. And we know all governments are talking about stimulating the economy by making the economy greener. And I wrote another book, it's called The Tesla Revolution, that was published 6 years ago. Well, everybody's talking about the EV revolution now. You know how much copper we need, how much silver we need for this EV revolution?
More than we have.
Yeah. So we have a perfect storm in which demand will increase. And I'm not even talking about investment demand. If the investment demand kicks in, I'm a buyer myself for physical platinum. That's a very small market. Once guys like you understand the supply and demand fundamentals of platinum, you will start to buy platinum hand over feet. And then the demand kicks in from the industry. We need fuel cell cars now, for the trucks and the buses. They won't run on batteries, they will run on fuel cell technology. You need 1 ounce of platinum for each fuel cell. So the demand for all these metals will increase over the next few years. And then you have this declining trend in production, especially in grade. So this problem can only be solved by much higher prices, because that's the only incentive for people to go out there and mine more, which is very hard to do. And I've been into a Twitter discussion with the author of the Bitcoin Standard, and he's saying that we can increase silver production very easily. Silver is not scarce.
How?
Yeah, he doesn't understand silver. You guys do, fortunately, but more and more people understand. And I'm afraid that some serious investor demand is starting to kick in now in silver, but in all metal markets soon. And then it gets scary, but as an investor, it gets very, very interesting. And that explains why we were up 85% last year. And that explains why inflow last month was over 10 million in 1 month. We're a small fund. Mm-hmm. So people are waking up, and they're starting to see the limited downside and the incredible upside.
Willem, I have 3 friends who never ever talked about silver before in their life, and they texted me this week and they said their dads are taking out their retirement to buy silver and gold. So you could see people start waking up. Lee, do you have another question for Willem?
Sure. One of the things that we've been seeing is a widening of the spread between the premium and the spot price of silver. I think that goes hand in hand with the increase in retail demand for bullion and coins that we've seen. Do you see that spread widening until the Comex kind of breaks? And what are your thoughts on the whole silver squeeze, where retail investors buy up silver and squeeze the actual Comex shorts?
It's always very hard to know which is the best signal, which shows the stress in the physical market. Backwardation is one of the best examples. When the price of spot is higher than in future periods. The spread of physical over that's another great one. But the graph we've shown here, the blue and the red line. Yeah. If you study that well, that graph, I really studied it earlier today, and then you can see that when the market wants to jump, when the silver price is on the verge of going up strongly, like we've seen in 2011, you will see that the difference between the red and the blue line becomes larger and larger. So if I look at this graph, it tells me that the stress is getting very, very severe now. I think we're on the verge of getting a very strong breakout. And you can also see that when you look at the SIL and SILJ, they didn't correct like the gold price corrected over the last 6-7 months. So that's why we also decided in our fund to scale back our gold investments and to grow our silver investments. And that's why we have outperformed in the last 6 months. So more and more people will see that silver acts very strongly. And again, if we break 30, look at the technical setup. It's we'll have fireworks.
Jim?
Yeah, next question. So let's talk about interest rates. Do you think the Fed, our own Federal Reserve here, is going to have to go negative like the European Central Bank? They've said the Fed, they're not going below zero on Fed funds rates, but some people I've heard on Twitter who I follow, people like you, are saying they're going to be forced to. What's your thoughts?
Yeah, well, the current pressure in the system is not that great. They use so much funny money, newly created dollars. 25% of all dollars were created in the last 12 months. that we now have the best recovery money can buy. But once the stress becomes larger in the system, I think interest rates can go negative in the US as well. People in Europe always said we can't have negative interest rates. We even have to pay now for our deposits. We have a large cash account here with a Dutch bank. We now have to pay negative interest rate. I published a statement from the bank to show that. So I think also in the US, it's also possible to see negative interest rates when the next crisis comes. And we shouldn't forget that things are going pretty well now. If you look at financial markets, of course, the economy is tough. And of course, a lot of people, especially people who are independent and have their own shops, they're in distress. But if you look at general markets, it all seems fine. And once we get a severe crisis again on financial markets, then we're in for a new game.
Gotcha. Well, we're approaching our 45-minute point, which is where we like to sort of wrap these up. And it's been wonderful having you. Oh, you have one more?
I have one more question. Do you know Max Verstappen?
Sure.
Yes.
We all like.
I love Max.
He will start racing again in March, late March.
Yes, he will start racing.
He's an incredible guy, great talent. He will be world champion Formula One soon. And he's a great guy.
Awesome. Well, we appreciate you so much, Willem. It's been an incredible pleasure from Wall Street Silver, Jim Lewis and Lee Justo with us. We really thank you. We hope we can do this again. We just appreciate everything, your books, everything you've done for the industry and all the information you bring. So we appreciate you from Wall Street Silver. Thank you so much, Willem.
Thank you very much.
Thank you.
Don't forget to like and subscribe, please.
Yes, please subscribe to our channel.
That was very kind. And what many people don't know, they can download the Big Reset for free on our website. So if you look for Commodity Discovery Funds, you can download it for free. People should really read it, because if you want to know what a reset means, a monetary reset, I think there's a lot of information there.
Can Americans invest in your fund, or is it limited to only Europeans?
The problem with the US is they love people investing in US markets, but they hate it when Americans want to invest outside of the US. So they make life very tough for US fiscal persons. And we can accept any foreign investor except US persons. and that's not because of our rules. It's because of the rules the US has enforced over their European partners. So that's a pity, and it shows you don't have real free markets in the US.
We don't have freedom of capital to capital movement between. That's yeah. Thank you very much.
Controls,
Thank you.
Yes.
Willem, let's do this again in a few months, and we'll get an update from you then.
It was a pleasure. Thank
Awesome.
you.
Take care, everyone.
Thank you, sir.
Bye.
Bye, everyone.
Take care, Willem.
Bye-bye.